All right, everybody, welcome back to the discount. I hope you're all having a great Sunday. Happy weekend. As always, we are here to break down the major markets every weekend for the week ahead. Today, we're going to be going over the usual suspects, the SPY, which is the proxy for the S&P 500, the NASDAQ or QQQ, semiconductors or the SMH, and Russell 2000 or IWM. As well, we head on over to our crypto markets, our majors here, Bitcoin and Ethereum. We will get to them towards the end of this video. So as always, these markets are moving together. So let's go ahead and start out with the SPY, the S&P 500. So what were we saying last week? Last video, if you're in the Telegram channel as well, we've been talking about how the S&P 500 has been going up into this major Fibonacci retracement level, the 786, which is around 451, 452, give or take. Since we've been long this entire move up, we said, you know what? This is an absolutely great time to start hedging our bets, taking profits as well. Let's pull the trigger on some put options because this could be chopping around here for a little bit in this summer melt up that we've been having. And it would be very normal and classic to get some type of drop, fill this gap right here, and go into the fall or autumn season, late August, September, October, and get some type of correction, 5 or 10%. This is what 5 or 10% would look like. It would fill this gap. It would fill this gap right here, probably even come down and touch its trend line near the 50 retrace on the SPY. Well, that would be totally normal in an uptrend. It's not what you want to see if you're ultimately super bullish, but that again would be totally normal market behavior, and that would allow the S&P 500 and the overall markets to shake out some late longs, trap some bears, and resume its uptrend. So let's clean this up and let's zoom in a little bit here. Well, how are we doing on these put options right now? Well, we made them in November, and you could have played them further out to give them time to work out. Right now, we are at about break even. We pulled the trigger right here at that 786 retrace, looking to take profit here on this gap fill at about 444 on the SPY. Get some type of retracement will be totally normal. And then again, come back down. We're starting a mini downtrend. Come tag its 618 retrace. That is the ultimate target for this put option play. So that's the bear scenario, right? We come down, we tag the 618 retrace. Maybe it gives us a little bit more. It comes to fill this gap a little bit lower and tags that trend line. That is where I would look to exit that put option position. But what if it's wrong, right? So these put options you risk to zero, or we are risking to zero. And what if it's wrong, right? So it's wrong if the market stays above this 786 retrace. It stays in this ultimate bullish scenario here. It stays above and then it goes and breaks out towards all-time highs. That obviously would look wrong. And we're still in mid to late August if this thing wants to continue going up. Since we have those put options in November, would we be surprised to top out maybe somewhere here, pull back a little bit, and then maybe come back down even further? It's still not November, so we probably either break even on that trade or get a little bit of profit. That would be totally normal. So again, a great risk reward in our opinion to hedge our spot longs. And also we've been so long in many different plays this entire move. So we're looking for a little bit of a turn. Let's clean this up again. So that's it on the SPY, guys. Common sense technical analysis. That's what we try to do here. Let's not overcomplicate anything. You already hear a lot of noise out there. So let's just keep things simple. One more thing I want to add. For charting purposes, I like to keep things clean, and I'm a price action trader. We are price action traders. But let's add some basic indicators. If we add our basic 20, 50, 100, and 200-day moving averages, you can see that the SPY is overextended. Now, there is no really true measurement for overextended on these indices. They can go much higher for much longer than you anticipate. But again, we are far from home base, and I would not be surprised to see it come fill this gap, tag its 20-period moving average, and even go again. It hasn't tagged its 50-day period moving average, 100-day period moving average in quite some time. So just wanted to pull that up so you guys see everything that I'm looking at and why I am taking these trades. All right, now let's head on over to the QQQ, the NASDAQ. As you can see, it's actually in a similar position as the SPY. It is above its 786 retrace, a little bit stronger of a position. As you can see, it spiked it a lot further. Again, if we just draw like a simple trend line right here, the best moves come from failed moves. And what do I mean by that? Well, the NASDAQ has been overextended. It's been leading this rally pretty significantly. Would we see some type of bearish pattern here, or are we just going to go ahead and fail this uptrend and get back down to that 618 retrace? That would be totally normal. And with something this steep and extended, you can expect some type of pullback. The bullish scenario again would be staying above this little trend line, above the 786, and continuing its rally towards all-time highs. We're choosing to stay away from shorting the QQQ and going with the SPY. It's all the same market. Let's clean this up. Adding the same indicators, you could see the 20-day period moving average is not far away, but it has been riding it several times already, right? So what that means when it's already been riding it several times and it's coming back down for a third time, you want to be on guard, right? Because it's not as important as support as it was, and it probably wants to go down and tag its 50-day period, which also coincides closely to the 618 retrace. That's pretty much it on the QQQ. Again, same market, just a little bit stronger and more volatility as the S&P 500. Let's see what we get this week. We'll be updating everybody in the Telegram channel as we see things develop in real time. Now, I want to go over a index that everyone should be paying attention to. It is the semiconductors. So the semiconductors, and it's another reason why we're pulling the trigger on put options in the SPY, and we might be looking at pulling put options on the semis as well. But this is a classic rising wedge on the weekly chart. It spiked all-time highs, as you can see here, and it has been consolidating in this rising wedge pattern now for 1, 2, 3, 4, 5, 6, 7, 8 weeks. Now, typically we would see either the 6th or 9th week, we would see some type of breakdown. So I wouldn't be surprised if we see markets hold up for another couple of weeks here in the summertime. It's summer doldrums. And if this breaks down, we have a lot of room to go in the semis. I would not be surprised to see it come back and retest this breakout area right here at about 130. So keep an eye out on these semiconductors. They are extremely strong. So we'll be looking to, again, play both sides of this tape. When we get back down here, we're definitely going to be looking at pulling the trigger on some longs here, right? Retesting this breakout area and down to this breakdown candle low would be a great zone to start looking at long and reflex trading. We'll be updating everyone in the Telegram channel on this play as well. And last but not least, the Russell 2000 for traditional markets. This is my favorite #1 market leading indicator. If you've been following along, we've been saying that the strength and rally in the Russell 2000 is proving that this market is far from over. Even if we see some type of pullback in the SPY, the QQQ, and the semiconductors, the fact that the Russell 2000 broke out of this big downtrend is very bullish for all markets. Now, what can we expect from the Russell if markets are going to pull back? Well, the ultimate bullish scenario is the Russell just stays above its 50 retrace, but we would not be surprised if things are going to pull back here significantly, that the Russell comes back down to retest this breakout area once again, an extremely important breakout area. Also coincides with the 382 retrace. We also do have a gap down here. This gap was not filled. I was expecting it to be filled, a spike of it in this down day right here, but it did not do that. So it's something to keep an eye on, because if the Russell is going to pull back and markets are looking weak, the Russell could do something like this, right? Come and fill that gap. This uptrend right here is going to hold. We want to see this gap hold. We want to see the Russell get out of here and resume its uptrend. Again, we were long from down here at the 382 retrace, already up 40% on this trade. So we have been riding this bullish momentum tremendously. We took profit here, took a little profit here, and now the rest is risk-free. If it comes back down, stops us out, so be it. The ultimate target I have on the Russell for this move, if we pull back a little bit here, I would love to see the Russell get back up to that 618 retrace. That would be totally normal. And then again, I would love it to get up into its 786 retrace at about 220. I think 220 is a great time to exit the full position. Coincides with a huge area of overhead resistance. This is the pivot point, as you can see. So let's see what we get this week, guys. It's going to be a very important couple of weeks here across all markets. All right, now let's head on over to the majors in crypto, Bitcoin and Ethereum. You are actively trading crypto. We are currently actively trading crypto on Femex. It is a US-friendly crypto platform. You can trade up to 100x leverage on futures contracts on Femex. As you can see, it is basically trading on TradingView, extremely user-friendly. The link to Femex is in the description of this YouTube video. If you have any questions, register there and DM us on Twitter. We will be happy to walk you through and help you navigate this exchange. All right, so Bitcoin. This is just some nasty price action, but what we've seen, and it kind of did it right here, if you could tell, let's zoom in a little bit here. What you could see on Bitcoin, and it broke out a little bit right here. I didn't expect it to come right back in. All right, so we had this little bit of a deviation here in this downtrend. But now it's eating time off the clock here if it wants to dip one more time, but I wouldn't be surprised if Bitcoin broke out one more time, hit this upsloping trend line at about 30,600, pull back a little bit, and then ultimately 31,000, 31,200. It's going to be the area I'm going to look for potentially playing the contrarian side to the short side, right? I wouldn't be surprised if we come up here, trap late longs, come back in, and then start to ultimately make that move down, that BART pattern. If you checked out our last video on Wednesday last week, this is a classic pattern in crypto, especially Bitcoin, which just can't seem to get enough buyers in this range, so it's going to come back down and seek liquidity lower. But let's see what we get here this week. We could also just break out of this level and just go down south. I would not be surprised there as well. But you have the levels here, you have the trend lines, and this is what we're going to be looking at. If you want to know if and when we're going to be pulling the trigger on anything, head on over to our Telegram channel. The link to that channel is in the description. And last but not least, Ethereum. I've been saying this, Ethereum is to Bitcoin like the Russell 2000 right here is to the S&P 500. Again, what do I mean by that? Well, it's been lagging this move. Bitcoin has been much stronger. So let's say you want to bet the market is going to continue strength. Well, this is probably the best bet in my honest opinion. If we get some type of pullback, we want to see this uptrend hold, maybe a spike of it down here to 1621. And the ultimate catch-up trade, in my opinion, is Ethereum, because if markets are going to continue strength, whether it's after a pullback or if we don't even pull back that deep, Ethereum should break out to that 2,200 level and then ultimately to 2,400, that 382 retrace from all-time highs to the low recently. So that's pretty much it, guys. Common sense for everything here. Looking at the daily chart. Also, we have partnered up with Coin Market Manager, the #1 automated journaling and analytics tool for crypto traders. Journaling manually is very tough for traders, I get it, but it is so important so that you understand where you are wrong, where you are right, and how you can get better. Coin Market Manager completely automated that journaling process. So when you are done trading, all you have to do is log in and get your analytics on your trades, your win rate, your lose rate, where you perform better, and everything in between. All you have to do is connect your exchange via API. It's automatic. And then when you are done trading, whether it's for the day, whether it's for the week or month, you head on over into Coin Market Manager. and you study your trades. The link to Coin Market Manager is in the description as well. And last but not least, everybody is in the Telegram channel, the discount Telegram channel. I post my YouTube updates. We're posting chart updates. We are posting everything in real time, and it is completely free. We have been absolutely crushing our swing trades in here, posting day trade ideas as well, all pertinent news and ideas. So head on over here if you are not already. Have a great rest of your Sunday. We will see you on the charts.